Traders, what's going on? This is Cole from the Free Trading Academy. We are talking about how to make $1,000 a day in the Forex market. It is doable, y'all. It can happen. And if you guys stick with this course and follow it to the very end, you will see that it can, in fact, be done. And it is done by a multitude of people on a daily basis. So we got the intros out the way, intro to Forex, a little bit about me. So we're going to get it cracking in the course. So from here on until pretty much the end, we're going to be on the charts, charting some things out, looking at real time examples of supply and demand trading. So this first video, what are we talking about today? We're talking about supply and demand zones. So this is the basis, the bedrock of this entire strategy, is identifying these zones, understanding what they are, and how they move the market. So I have a few blocks of notes here. I'm a note taker. I'm a visual, person. So I like to write things down. That helps me remember. So if you're like that out there, then you could copy these notes in here. If not, then you could just disregard them. I'm going to get them out the way in a second. But first, what is a supply zone? So a supply zone is a block of sell orders, institutional money, big time orders waiting at a certain area on your charts, and they are waiting to push price lower. So a supply zone happens before a downtrend. Okay. A demand zone is a block of buy orders waiting to push price higher. So these happen before an uptrend or a continuation of an uptrend. Same thing with the supply zone. They could also happen in the midst of a downtrend after a correction. All right. So, some characteristics. They're not price, but a zone. So what does that mean? So a lot of people, they, when they first start Forex trading, they're taught to get on the line chart, which I teach as well. And let's say, let's mark off your support and resistance lines. Okay. So, here's one here, and, here's another area here, right? So the good thing about this is, hey, roughly where price is respecting these areas. Okay. The downside is it's just one price. So if you look at these wicks right here, you could see that, and this is the 4-hour chart. So if you scroll down to say 30-minute, all right, we see that price closed above. It went way above here. It closed above this level again. So if you're just trading these, static levels of price, then it can be very confusing sometimes to know exactly which direction the market's going if all you're doing is just that, right? So the good thing about supply and demand is it's a zone, because you have to remember there are many different players in this market. You have banks from all over the world. You have hedge funds. You have brokerage firms. They have orders all in this area. So it might not be just one order block at this price. It could be some here, some here, some here. So that's why it's good to draw a zone so that you could stay in the game. You don't want to get faked out, and that's oftentimes what happens to traders when they just draw support and resistance. Okay, it helps me, especially when I first started off, to think of supply and demand as turning points in the market. So when you're on a naked chart like we are right now, and you're trying to find your zones, just look and see, where did the market turn? So you have the market go up, and then it just, kind of lost some steam, and then it came right back down here. So obviously we know that in this area, especially after this massive price move, there's a lot of sell pressure waiting in this area here. Okay, price came down, try to push back up, and then we just had an aggressive drop. So this would be a supply zone. We mark that off. Okay. Areas, again, where buyers and sellers stepped in and turned price around in the opposite direction. So we're just kind of building on our foundation that we already know now. Just really want to hammer that point home. And lastly, it's areas where institutions have large orders. So, in the last video, we talked about different players in the market, where we fall into. We are retail traders. So we are people who are not managing billions of dollars in capital, which would give us the power to move the markets in ways that we want. All right. So we are retail traders. Conversely, you have institutional traders, which are the people I just described. So these are the people who have these large orders, large market, large pending, and they're able to progressively move price in the direction that they want it to go. Okay. So advantages of this type of skill set, this type of trading, is you're not chasing price. Like there's so many strategies where you're just trying to pick the very tops and the very bottoms of trend reversals, trading off of one pattern, trading off of a moving average crossover, something like that. This allows the sellers and the buyers to tip their hand first. All right. That's what I love about this strategy. It allows you to see price move out of an area. So you know that there's selling pressure in this area right here. Okay. And now all we do is wait. I mean, it could happen in a matter of days, could happen in a matter of weeks. We wait for this zone to be retested. It has been retested. This is a live chart right here. Okay, so price finally made its way back into the zone. All right, had a little stop hunt here, which we are going to talk about fake outs and stop hunts later on in this course to play a little bit of defense against market manipulation. But again, you see had a head and shoulders pattern, and price is now being rejected again from this zone because this is an untested, fresh supply zone and has not been tested since price left originally. Okay, so that's all it is. You're not chasing price. You're actually just waiting for price to get back to the zone that has already revealed itself, if that makes sense. So it's a very powerful tool to use. And you're also able to trade on the right side of the trend, right? So now, again, going back to this example, this is a clear supply zone. We know that when price gets back into here, all we're just waiting for is some sort of pattern. And then we get that pattern, we get a head and shoulders, and price moves down. So now we're looking for sells. All right. And it could give you an edge in predicting market moves. So nothing is for certain in trading, whether you're trading Forex, stocks, bonds, everything is volatile. Nothing is predictable. But the best thing that we can do, is give ourselves an edge in the market, give ourselves just a little bit more probability to win trades than the next guy. And that's the best that you could ask for. All right, so I'm going to remove these here. I hope you guys are able to write it down. If not, you could just rewind and steal those notes. So how do we find these zones? So you've been seeing me kind of draw out a couple examples as I've been talking. And if you're completely new to this, you're wondering like, how do you know where to go? Okay, so it's really, you could boil it down to a 5-step process. Okay, so 1, you find where the current price is. So this is the current price. Okay, 2, you look left on your chart. Going this way. All right. What has happened in the past that could give us an indicator of what price will do in the future? All right. So we're looking left, scrolling left. All right. And we're trying to find these zones. Okay. 3, look for a big red or green candle. All right. Or a succession of red or green candles. So this right here would be a good example. I think I marked off this earlier in this video. This is a huge engulfing momentum. Well, I guess you can't consider it engulfing, but it is a high momentum candle indicating that there's a lot of sellers in the market. All right. Followed by another one. So this whole move right here, we want to find the origin of that move. Okay. So the origin is right here. So for me, I like to draw base or top of if I'm drawing a supply zone, top of the candle to the top of the most relevant wick, which would be this one. So it could be the candle itself or the candle before. All right. Because again, you're zooming in if you zoom in on a smaller time frame, like 5-minute, 15-minute for your entries, this wick right here is smaller candles pushing higher into the zone. All right. So you want to, again, if you're especially on the lower time frames, it could be easy to get lost, lose your direction. So it's good to know that price is still trading in the zone. All right. So in this example, we looked left. We found the origin of this move right here. We highlighted it in our zone. And now we have a fresh supply zone that we're waiting for price to come back and do something to. Okay, what is going to happen when price comes back? So we see price eventually does make its way back. It tests the zone. All right, it gets rejected. So you could have taken the sell here, wrote it down. All right, but again, it looks like overall on the 4-hour chart, we're making higher highs. So it does look like eventually we're going to push through because we're in an uptrend. It does. We get a solid break. We get a nice retest of this zone here. Okay, followed by a bullish momentum candle. All right, and then we keep pushing higher. So you would have had a nice sell opportunity here, and then on the break of the zone and retest, you would have had a nice buy opportunity here. All right, so that's how we find these zones, guys. In terms of the technicals, again, let me go back on it one more time, just in case there's any confusion. So I like to draw, for example, top of the body to the top wick. All right. Because price sometimes, especially when we talk about fake outs, price does like to test the back of the zone. Sometimes price closes outside and comes back. All right. So you want to have a nice, healthy zone here. All right. So that's how I like to draw mine. Okay. So what makes a strong zone? What makes something worth marking out? So there's a few characteristics, and sometimes you won't get all these into one. All right. Let me just say that sometimes you will not get all these rolled into one. But generally speaking, these are good characteristics to look out for. So one is a narrow price range. Okay. So again, this is a good example here. This is a decent example here as well. This demand zone. All right, see prices making its way down. We get a few candles, 1, 2, 3, 4, 5, 6, about five or six candles, and then price shoots its way out of there. The reason for that is you just don't want price to get exhausted. If you have this long range, then it may still work, but it just doesn't indicate that there's as much aggressive selling or buying in that zone to really get price up and out of there. All right. But I still draw some, on ranges. For example, this I wouldn't consider to be a narrow price range, but you do see that price eventually really aggressively takes off out of here. All right. In terms of narrow price range, you're looking for between 1 and 10 candles. But again, you don't always get that. Sometimes you do, sometimes you don't. But generally speaking, between 1 and 10 indicates an aggressive supply or demand zone. Okay. Second is strong price move. So when price does make its way out of the zone, you want to have a nice bullish, bearish momentum candle or engulfing candle, something that indicates that the sellers or the buyers are really ready to make a move. All right. Let's see if I can find demand one more time here. All right. So demand zone here. So again, you see price, keep doing that, aggressively makes its way out of this demand zone right here, this candle right here, and it eventually really takes off. So you want a strong price move, something that indicates that, the trend is now set and established, so that when price does make its way back to the zone, the chances are high that you will have some similar selling pressure or buying pressure, and price will react the same. Okay. And then also fresh and untested. So I talked about this zone a little bit earlier in terms of being fresh. And, if you're new, you're probably like, what does that mean? That just means that the zone has not been tested before. Okay. So we see our zone here, we drag it out into the future. All right. So assuming that all this over here hasn't happened yet, this would be an untested zone. So price has not made its way back into this area. We're still waiting. Okay, here it is. So now it's being tested for the first time. So this would be considered a fresh zone. All right. If price were to make its way back into the zone for a second time, then it would not be considered fresh because we already have had price action in this zone once before. All right. So the best zones are the ones that have not been tested yet. Okay. And then lastly, a good zone has a fake out or a stop hunt. Okay. So this indicates that there are buyers or sellers actively trying to manipulate the market to get retail traders out of their positions to make it easier for them to move price in the opposite direction. So So a stop hunt or a fake out, and I have an entire video that is later on in this course dedicated to this concept here. But so again, we have a supply zone here. We have a push and close outside of the zone. So this right here would just trap buyers, right? It'll trap buyers into thinking that price is going to keep going up. So they get into their buy orders, they place their stops down here, all right, and they end up getting stopped out. Okay, same happens reverse. You could stop out sellers as well in the reverse of this example here. All right, so that is a telltale here that okay, we have people that are now trying to take buyers out of the equation. So we know here that eventually price is going to drop. All right, so that's why in this example, I definitely would have highlighted this, even though we have more than 10 candles in this range before price makes its move out of here. I still would have highlighted this because we have a stop hunt here. All right. Okay. So that's how I draw my zones. That's the power of supply and demand trading. I do use them along with traditional support and resistance lines. And again, I have a video for you guys later. What am I looking for here? Okay. But I do not use these. I use these to help play defense. I use these to help identify stop hunts, and I'm going to get into that later. So this could be a powerful tool. I don't want you guys to think that if you're drawing lines in your chart that they're obsolete. They actually could be very helpful if you use them the right way. So stay tuned and watch that video later as well. All right, so this has been intro to supply and demand trading, how to draw these zones, how to identify these zones and trade them. We're going to talk about entries later on in the course. We're going to talk about where to place your stops, some creative ways to place your entries so that you're not just doing the same thing everybody else is doing, and you'll end up getting caught up in these fake outs here. All right, so stay tuned, guys. This is a great course. Again, it's 100% free. The rest of these videos will be in succession on YouTube. Give us a like. Feel free to reach out with any questions. But happy trading. Take care, and we will see you soon.